Hello traders, welcome to today's Pairs of the Day update. Let's dive into the latest movements and key factors influencing the Japanese yen, JPY, US dollar, USD, and Canadian dollar, CAD. The Japanese yen has been gaining strength recently. This is largely due to increased speculation that the Bank of Japan, BoJ, will raise interest rates at its upcoming meeting in July. This anticipated rate hike is providing support for the yen amidst its recent weakness. The possibility of a BoJ rate hike is a direct response to the recent weakness in the yen. Market participants are closely watching the BoJ's actions, expecting that they may need to react sooner rather than later to stabilize the currency. The US dollar is experiencing some volatility as traders eagerly await the release of the US Consumer Price Index, CPI, data for June. This data will play a crucial role in guiding the Federal Reserve's policy decisions in the coming months. Fed Chair Jerome Powell has acknowledged recent progress on inflation but emphasized that it is not yet appropriate to cut the policy rate. The Fed is focused on achieving a sustainable 2% inflation target before considering any rate cuts. The Canadian dollar is currently under pressure. The rise in Canada's unemployment rate has led to speculation that the Bank of Canada, BOC, might cut interest rates in its July meeting. This potential rate cut is influencing the loonie's performance. Another factor impacting the Canadian dollar is the decline in crude oil prices. As a major exporter of crude oil to the United States, lower oil prices can undermine the value of the CAD. Now, let's see what the technical analysis reveals. Let's take a look at the chart. We have opened the 4-hour chart of US dollar to Japanese yen. The price is currently moving above the 20-period moving average, with the stochastic indicator declining from the overbought area, suggesting a potential decline. For support and resistance, we have identified 161.07 and 160.26 as support levels, and 161.94 and 162.83 as resistance levels. If the price continues lower, it could find support near 161.07 or potentially lower towards 160.26, with profit potential of 50 to 130 pips. On the upside, any corrective upward movement might face resistance around 161.94, with potential to test higher towards 162.83. Let's switch to the 4-hour chart of US dollar to Canadian dollar. The price is currently moving below the 20-period moving average, with the stochastic indicator slightly lower near the oversold area, suggesting a potential decline. We've identified 1.3603 and 1.3557 as support levels, and 1.3641 and 1.3686 as resistance levels. If the price continues lower, it could find support levels at 1.3603 and 1.3557 with profit potential of 10 to 60 pips. Conversely, if the price decides to move higher, it could find resistance levels at 1.3641 or even test higher towards 1.3686. Always remember to consider your risk management before entering any positions. Alright, that wraps it up for today. See you in the next video.